Good evening, how is everyone? We have a test coming up tomorrow, so I wanted to go over just a few of our tricky transactions. The first one having to do with revenue. If you can remember, revenue is how we make our money. And these transactions are in your notes, but hearing my voice maybe will help. So if we receive revenue from cash customers, we're doing our job, which is our revenue, and it goes up, and we're getting cash. So I think that one we're pretty good on. The next one, though, is we're doing our job, but we're not getting paid cash. We're billing our customer or our client, and then we'll get paid later. So in this case, Arch completes a job and bills Walker. What are we getting? In this case, we're not getting cash. We're getting accounts receivable, and that's an IOU to be paid later. You build a relationship and you trust them. So now we have an outstanding balance. It's an asset because it's a good thing. When you're planning on how much your business is making, you're including that in it. Later, now we're going to receive $850 on account from a credit customer. We can pretend or assume that it would be Walker because Walker owes us $10.50, but we're receiving $8.50 of that money. So right now we have a $10.50 outstanding balance that we're waiting to get, and now we're receiving it. So what are we getting? We're getting the cash. And how are we getting it? It's coming out of our accounts receivable, which is the balance we're waiting to receive. How much are we waiting on now? Just $200. One of the biggest questions is, why is this not a revenue? Well, we earned the revenue back on the first transaction where we listed $10.50 here. We did not do the job again. We're just getting the cash from what we were previously owed. And that is on the test, so hopefully you understand that concept. Another one. If we buy on accounts, this is the accounts payable where we're waiting to pay. So if we buy on accounts, our accounts payable, well, what are we getting? Equipment, and that goes up. And how are we getting it? We're adding to our debt. Remember, if we're adding to our debt, almost like you add to a credit card balance, it would go up. And then both sides still equal. Later, if we are going to pay them, so Arch Company pays $1,800. The second you see the word paid, you know your cash is going down. Paying its creditor a partial payment. So we have an outstanding balance of $5,800, and we're paying off $1,800. So I'm using my saying, what are we getting? Well, we're getting a reduced debt. Doesn't sound great, but we're getting a reduced debt. And how are we getting it? We are paying cash. Another example of this from a previous problem was we pay on account $200 to City News for advertising. Legitimately, don't read after you see pays on account. They're the only three words that matter. If you start looking at this, you might get hung up and make a mistake and think you're buying advertising, but we already paid for it. I lost my place, excuse me. So, sorry about that. So we are reducing, we're paying on account. Again, our debt goes down, our cash goes down. When it comes to expenses, there's two ways that they get listed, and I don't want you to get confused. One of them is where it's very clear. It says received and paid a bill, in this case, utility. So what are we getting? We are getting an expense, and we list it positive. We're getting a charge. And how are we getting that? We pay cash for it. Because there's already a negative sign, it takes away from the balance, and we add it that way. So in this case, it says received and paid. And on a test or quiz, it would even say a check number to have source document proof that it happened. Another one, though, in the next one, it just says received a bill for an expense. And in this case, this was the advertising one from City News before. If we receive a bill, but it doesn't show you a check number or doesn't tell you you paid it, then you can assume that you received it. And one of our multiple choice questions says expenses are recorded when they're incurred. But since we're not paying it right now, we count it as a liability. It's been last on our problems, but it could come at any time. The last one on there is a withdrawal for personal use. Whether the owner takes a salary or not, they have the right to withdraw money. Capital is putting money in. Now this is a shortened form. This should be drawing. We have our own account for drawing. So this is actually a bad example of a picture, but we would have an account right in here that says drawing, and we would be adding to our debt. So we add to drawing, we take away cash. Hopefully these couple tips have helped you along the way. This one is an expense and you paid cash. This is our compound. If you buy equipment, $3,520 goes up. You pay $620 cash down payment, and you charge the rest $2,900 on account. Arch withdrawals $2,500. Again, we have drawing as a separate account, and we would list it positive because it would have its own account to take away from. And hopefully that helps. This is just a sample. When they're complete, the left side should always equal the right side. And good luck on your test.